Well, it's good to be back on the orange couch today, and on my left-hand side is a man we use quite a lot here at Propel, Adam KAMBOURIS from MAW Money. We talk about the importance of a great finance team behind our investors, and Adam, we've been talking about it off air. It's hugely important. It's arguably as important or more important than the actual property purchase itself, isn't it?
Yeah, it is definitely. I think it's important to just build that sort of village around you, whether it be finance, your property expert, your accountant, your solicitor. And they can all work independently of each other, but then come together to sort of get your plan and put in place and move forward and get that property purchase, but plan for the next stage as well.
We talk a bit about it like there's mum and dad kind of brokers, and we experience that a little bit with people come to us with their own broker. With all due respect to that and to those brokers, but they're often just getting people ready for like an owner-occupier property purchase, and they might have done that initially and done that really well with the 20% deposit. But when those people now want to go into an investment property purchase, a lot of brokers aren't necessarily as experienced in that field, are they?
Yeah, exactly right. We talk about whether you take an order or you sit down and really understand what the client wants, where the client wants to go. And sometimes that's having hard conversations because it might not necessarily be the outcome the client wants, but it fits into their plan of sort of the 1 year, 3, 5 or 10 years is where they want to go.
Yes. We talk about it as well. Like there's the investor people setting up their, I suppose, their portfolio. Sometimes it's worthwhile for them, if they're self-employed, to go a low doc lender at a slightly higher interest rate to get that right deal on the property, isn't it? And then you can potentially refinance them after. I know you're helping some of our clients do that now, Adam.
Yeah, again, it just comes back to understanding where they are at in their life, where they are at in their employment, and how do you get to where they need to go. And it might be, it might be a bank for a year to get them to where they need to go.
Secure the right deal, because the bigger picture on that is it's far greater than the 0.5% more they might be paying.
Exactly right. And there is banks that will work with them on that journey, and those banks understand who they are too. So it's about helping the client now, and then we go on and set them up and look for a better rate or something that's more sustainable down the track.
Yep, you've definitely been doing a really good job with a lot of our clients, obviously yourself and Mark there from MAW Money. But just to go back on your story, Adam, what are you, in your 30s now?
Yeah, 36.
36, and you actually started in banking, well, it's basically half your life ago, at 18, is that right?
Yeah, so Mark and I's journey is really similar in how we started. So banking's all we really know, bar sort of 3 years overseas. Playing footy and things like that it's all I've ever done.
It's good, obviously, for a broker to have banking experience, I would think, because obviously then as a broker you're dealing with them.
Yep.
With them / against them maybe, but to try and get your client the right deal. But starting in the bank, you kind of know how they work inside out. Would that be fair to say?
Yeah, and some things we've learned, like Mark and I both started as tellers, then we were personal bankers.
Literally worked up.
All the way through. So we understand the whole process. And some of the best things that we'll talk about is whole of wallet lending. So you're not only there for them around the home loan, you've got to look at how their everyday banking operates. You've got to look at how their credit cards or personal loans operate.
If there's any holes in their situation.
And we're used to working with teams. So when we're in the bank, we would do the lending or the accounts. Then we would have to, it was part of our compliance to refer those clients to a specialist, either whether it be accountant or whether it be a financial planner. So we look at the whole picture rather than just the loan that gets them now.
Yeah, so it's more about the financial outcome, which is hugely important. But yeah, look, so the background there in the banks for both you and Mark's is shining through a lot with our clients, because we had a client come to us the other day with their broker and they wanted to add value to a really good block of land we found them and build a house. The bank they were going to go through didn't even do construction.
Yeah.
It's like, how's that going to work?
No.
How's the broker not even know that?
And that comes from, so I've learned a lot from Mark. So Mark's the director of MAW Money, and sort of skipping back slightly, Mark had taught me to lend. So I started processing Mark's deals at Westpac.
So you've had basically an 18-year relationship in business.
Yeah, a long relationship. And then it was sort of for the last 5 years of Mark was investing in myself by sponsoring certain things, and that through MAW Money and investing in my community. And I eventually realised that he was investing in me.
He was.
And it came to...
Because you're a rugby coach as well.
Yeah.
And rugby the juniors.
League, exactly right. And then he basically gave me an ultimatum and said, you've got 6 months to decide if you want to jump ship and take the gamble. And it's been the best
best thing you've done?
18 months of my life, yeah.
Amazing. It's a bit like you're self-employed, aren't you?
Yep. I work for myself just under the MAW Money brand.
Yep.
So
with someone that you like and trust.
Exactly right. So Mark's been like a mentor in that. And then probably the unsung hero that a lot of our clients may not always see is Sharon.
Yes.
So not only... Usually in the world of processing, you might have someone that's just processed loans their whole life. Well, Sharon's actually been a lender.
Wow.
She's a fully qualified lender. She's got the same diploma in that, but her expertise is in compliance and processing. Yep. So
there's three of you with the full experience.
She knows policy inside and out.
Yeah.
And often we'll say, hey guys, have you thought about this? And that leads back to that knowledge question that between the three of us, there's probably not anything we haven't seen.
Yeah.
But then you start to realize what banks do what banks can do this, what banks can do self-employed, what banks can do someone that's just changed. So not all banks will lend to someone that's just moved jobs.
No.
That has only been a month in jobs. So it's all these different little policy things that you need to know that I wasn't even aware of as a lender for a bank. I was like,
because with one bank, you're only seeing one bank's options.
Policies.
Now you're a broker, you've got to be across all the banks. How many lenders, roughly? I mean,
so we have 60 lenders on our panel.
Wow.
And we probably regularly look through... we look at all 60, but you've got about 20 that you know inside and out. And then, we've got deals at the moment that it's probably been 2 weeks of research because it's not something that's out there. So you put a little proposal together, you go and talk to that BDM who talks to the credit. So when you come back to the client, you know the deal's almost going to work prior to lodging that submission. Yeah,
I've seen stats recently, Adam, and you guys would know it better than me, but it's at 60% of people now go through brokers, whereas it used to be... everyone went through the bank and then it was 10%, 20%, 30% brokers. But now more and more people are using brokers, aren't they?
Yeah, and it comes down to a trust thing. So I think there was, in finance, there's always a little bit of, am I being ripped off? Are they doing it for the right reasons? But I think since obviously going through the inquiry and everything like that's come out the other side, that we're legally bound to do the right thing by you.
Of course.
We have to be able to stand up in court and say why we've chosen that particular bank or that particular product. And we honestly believe that. So when we look at a loan and we look at submission, we make sure it is right for the client.
Yeah.
And not just now, because if the client comes back in 3 years' time and says, hey, you knew I wanted to buy an investment property. I can't do that.
Yeah.
Well, we've got to go back and be able to say why or what we've put them in that situation.
Yeah. It is old school, isn't it? Our parents used to just go to one bank and we'd go get our, savings account with the bank. I remember the Dolomite account, a bit older than you, but you'd get everything with the one bank. But let's be honest, with all due respect to the banks, they don't care about you, the investor watching this right now. They don't care about you. Often new deals will get lower rates. You really need a broker on your side to care about you, to do annual reviews, to make sure you're getting the right deal. Because it's confusing for people.
Exactly right.
Isn't it?
And everyone thinks that means having a broker that you have to refinance every 2-3 years. That's not the case. We're actually in the process now of going through with our clients. Often some of them haven't even reached out, but we know we can get them a better rate just with their current bank, and we do that for them. So we go through a review process. That's always our first point of call.
Yeah.
Then we often find that the bank may not come as low as what we can get. So then we talk to the client about, this is what we got you the current bank. Yeah. But this is what we can get you outside. Yeah. So there is a review process, and we do that for you. So those clients that want to be loyal, find yourself a broker. Doesn't have to be more money. It can be someone that you've used or your family's used, but that's where your loyalty lies. And that's what we want to build with our clients. We don't want to just do a loan for our clients. We want to be able to go on the next, like Mark and I are 36, and I think Mark's closer to 40, but we won't go there. Yeah. But we want to be on that journey with our clients for the next 30 years and then their kids.
It's not dissimilar really to what we do in the property space. Clients come to us and they say, hey, do I go do it myself and buy something around the corner from where I live and I don't really know what I'm doing? Or do I come to you, Propel, you find us the best property, you're dealing with the builders, the developers, the sellers all around Australia. It's not really dissimilar. They come to you, obviously, before they come to us or in conjunction with. You got to find the right finance deal out of all those 60 different potential lenders, the right deal for their situation, the right interest rate. And so I genuinely think it's way more risky for people just to stick with one bank Because sticking with all your stuff with one bank, don't they kind of have you by the balls a bit? Isn't it safer as an investor to potentially spread it out or not? What do you think about that line of thinking?
It's going to come to your strategy. So if you're looking to use equity in a property, so you may need to have your properties at the same bank.
Okay.
If you've got enough equity in each property that they can stand alone, well, you can go and get different deals from different banks.
Yeah.
So again, it comes down to understanding
everyone's different.
How that client is using. Do they have cash that they're going to put in, or are they relying on equity?
Yeah.
So again, it comes down to right at the start understanding where they're at now, what they currently hold, and where they want to go.
Can be a pretty big risk to get the finance wrong, because you think about an investor or even an owner-occupier going to buy a property, they go with the wrong bank or wrong broker and they get a declinal. Mm-hmm. Now, that would mean they miss out on the property. But what else? If with a declinal on your history, will that query other banks later on and say, well, why'd you get declined? Is that a problem or not?
Again, this comes to how you've lodged the loan, whether it actually gets lodged as a decline or there's questions that you're able to not proceed.
Okay.
So again, that's if we ever get to that stage, we really try and be on the front foot that it's a not proceeding. The clients chose not to proceed.
Because I suppose you've got relations with the banks. You can ring the BDM and say, hey, I've got John and Mary Smith here. Yep. Is this deal going to fly or not? Yep. So you pretty much know before you're sending it up.
So we will do a lot of work up front. Probably there's a lot of brokers out there that do. There's a lot of brokers that don't. So we spend a lot of time up front to make sure that 99% of the time the deal we submit gets approved.
Yes.
Because you're also playing with people's biggest emotional attachment. So not only is it getting a decline and missing out on the property, but they're devastated.
It's shattering their dreams.
We would prefer to have a hard conversation up front and say, hey, you can't buy a $650,000 property, but we could look at something for $500,000. Or do this. We don't use the word no. We use the word not right now. If we can't get them what they want.
How can we get into a position to be able to get the loan approved?
Yeah. And that comes back to that trust factor that sometimes it's a conversation clients don't want to hear. Sometimes it might be ringing yourself and saying, hey, Michael, this is just not right for this client.
Yeah.
And that's where it works really well, because in the end of the day, as a broker, my allegiances have to lie to the right thing for the client.
Even though you're getting paid by the bank, you by law have to be getting the right thing for the client, which you want to be doing morally anyway. And that's probably good that things have tightened up there, because I used to say, like growing up in the property game, I've been in a similar time frame to you almost half my life. It's like everyone's a broker, right? There's so many finance brokers. They're on every corner, every bus stop, but there's a small percentage that are actually very, very good. It's a little bit like people in property. There's property groups everywhere, but again, there's a small percentage that actually look after their client,
Exactly right. And it is hard because there's a deal there, and that's income. That's helping provide for your own family.
Of course. But you have to put them first.
And then the thing that Mark and I and Sharon often talk to is we live by, would we lend these people our money? If that's a yes,
that's interesting.
We'll proceed with the deal.
I like it.
So are we comfortable to lend, or are we comfortable that this family, this person's not going to be in stress by taking on this asset or this loan? So again, that's understanding your client, because on paper, to what things said, you might understand how that business operates, and you know that a self-employed person can just do more sales and increase their income.
Yes. Or they might have had a quieter year because of this, and now this has changed, so things are looking more positive for them.
Exactly right. Where with the PAYG people, you understand it's harder for them to increase their income.
Of course.
So how is it going to work if rates go up? So banks build a buffer in. We also build our own buffer in.
Yes.
So we will not tell the client the maximum. We'll always build in a 50,
bit of a buffer,
$100,000 buffer to make sure.
That.
And the conversation we actually have with the client is, hey, before anything else happens in your life, if this investment property isn't rented, you may need to come up with this. How does that sit?
Yes.
Or if it is an owner-occupied client, before anything else happens in life, you need to pay $5,000. Can you put your head on the pillow at night and go to sleep? And they'll be like, no.
Yes.
Let's scale that. But I will comfortable spending $4,000 a month.
Speaking of that, a lot of the banks are throwing around $4,000 at the moment to refinance with them, aren't they?
Yeah, there is. And that's the other thing.
And why are they doing that? Because there's less people that can get loans now because interest rates have gone up. Is that roughly what it is?
And it is, they've been there for a while, but you're probably going to see in the next couple of months a really competitive market.
Yeah, tell us how you see the next 6 months rolling out, Adam.
So we just go off facts. There's a hell of a lot of people in Australia rolling off crazy fixed rates, probably rates that probably shouldn't have ever got that low.
2-3%.
Ones.
So their repayments may double or triple. Yep. Now, it's scary, isn't it?
It is, and that's what...
What can they do if they can't make the repayments? They've got to call the bank straight away.
They've got to speak. Again,
or their broker.
Speak to you. So what we've been doing with a lot of our clients, and again, this is where Sharon plays a really strong role. A lot of clients came in early because they're like, hey, what should I do? They trust their broker.
We're not in hardship now, but we might be.
Exactly right. Or they said a year ago, okay, what can I do to just protect myself a little bit? We worked out, okay, this is your repayments on 1%. This is your repayments on 2%. If you can start to put that away now, if obviously you need to draw out on that, you can. So some of our clients have been paying double their repayments for the last year. Yep. The best thing we can say, again, is that as you roll off, if you want to go and talk to your bank, talk to them about what's the best deal you can get to me.
Yep.
Find a broker that you really trust. Again, we never sit here and say, find more money. Talk to us. Obviously, find someone that you're comfortable with.
Yep.
We say it too. We've had clients that are now clients of ours that weren't clients, that literally just came to us for advice. And then we've worked with them, earned their trust. Initially, it's for no other reason but, hey, you're getting a great deal.
Yep.
And some clients, that's great.
Yep.
But the other thing is review where you are right now.
Yep.
And that may mean... okay, is there things in my personal life that I can cut out?
Yep.
Or what's the non-negotiables that we can cut out?
And there normally is for all of us. There's things we can cut back on.
Exactly right. And then go and find the very best deal you can get.
Yeah. And worst case, if you think you can't afford it, we'll sell the property and swallow your pride, inverted commas, knuckle down, work hard, resave back up again and buy back in again.
Exactly right. You just got to find out what's important to you.
Yeah.
And that's what we say to our clients. And again... it may be that you sell the property, or it may be that you rent the property and rent somewhere cheaper.
There you go.
There is always options to work through.
I don't think it's going to be as bad as what everyone says. It's like in life, like what we've learned over the years. Nothing's ever as good as what it seems. Nothing's ever as worse as what they're saying. It's going to be somewhere in the middle. I don't think repossessions are going to be that bad later in the year when people come off their fixed rate loans. Do you? It might increase a little bit, might it? Or
you might see a little bit, but again,
but they're low at the moment.
The thing people have got to realise too is that even when they were at 2%, there was 3% buffers.
Yeah,
so the bank's built in a buffer. There's always a buffer built into that. So if you were servicing...
it's called an accessibility rate.
Yeah, accessibility rate. So a lot of clients don't understand. And this is what it comes down to. I can afford the 2%. No, the bank's assessing that on 5%. So now the bank's assessing it on 8%.
Wow.
So there is always been a buffer built in that through AFCA and things like that had to be built in. Safety nets. So if you went back down to your bottom dollar of just purely paying your living expenses, you probably find you'll be able to get through and find a way to get through.
Yep.
But then there's a lot of people out there that we're starting to see real money come back to the market too. So people that have sat back for a couple of years.
Savvy investors.
Build up their money. There are a lot of self-employed clients because, as I said previously, self-employed clients can trigger how much they earn.
Yes.
They can go out and find more sales and things like that. And you know what? It's the age of self-employed. We're seeing far more self-employed people or PAYG people that have a self-employed on the side.
Yes.
So again,
a lot of options for self-employed people with either going full doc or they can go with what they call low doc, is it? Or
there's multiple
with
options.
accountants' letters, all that kind of stuff.
Yeah, there's multiple different options. It's again being upfront and honest with your broker or
tell them everything.
Tell them everything, and we'll work through how that works.
Yep.
But you're starting to see, and this is where brokers probably are coming more to the forefront because your PAYG, two incomes, one owner-occupied property, that's not just the majority of lending now.
No. So many people have got a side hustle, Adam. They've got an online business as well as their day-to-day business.
So again, that might be, okay, I've been doing that for 6 months. Right, you can't buy right now. Get 1 year of financials or 2 years of financials if we need it.
Yep.
And then we can go and buy.
Yep.
Because then we can use that income. Okay, cool. Let's work together on that. let's consolidate some of your consumer debt.
Yep.
Because we'll get that all into one. So at MAW Money, we don't just focus on home loans.
No.
Mark set it up in a way, and it's come on with my knowledge as well, that we'll look at the whole of wallet again.
Yep.
Okay. So we do anything from personal loans,
business loans,
commercial loans, car loans, and all that. Why we want to do that as well is
steer clear of the car loans if you want to build an investment property
exactly
portfolio.
Right.
But anyway,
exactly right.
Or everything you do.
Look
everything
after the whole client. And that's what we want to do.
That's important. I genuinely feel it's a risk for anyone who has got a home loan or wanting to buy investment properties to just go through a bank. I genuinely do. You need to find a good broker. We've talked about it a lot on our socials. And you can see that's happening in the market now with, 60% or 70%? Now use a broker. Yep. Like, that's amazing. That's a huge turnaround.
But again, we say, if you've got a lender, because there is good lenders. Like, I used to manage lending teams, and there's good lenders there.
In banks.
But they only can use that bank. But if you have a bank that you've worked really well with and you've got a lender there you trust, that's fine. If you do want a second opinion, you can still go and talk to a broker.
I think that's important.
And we'll turn around and say, hey, you're getting a great deal there. Again, it comes back to, I have no legal reason to move you.
Yeah.
I don't have a better deal for you.
And you won't move anyone, and that's huge. Exactly. And for the sake of moving them.
And what a lot of customers don't realise is that little piece of advice from us doesn't cost you anything.
No.
You don't pay us.
Yep.
You don't pay for that. It's $300 for that piece of advice. Yep. It's, hey, Adam, this is what I'm getting. Does it sound okay?
And you don't mind if they're not ready for 6, 9, 12 months. As you say, you get them into a position to be able to buy when they're ready.
Yeah. The biggest piece of advice Mark and I can say is try and refrain from what we call barbecue chat. Yeah. Everyone's got those friends at barbecues that often will go, I just got this really great deal at 4.2% on this for my property. Next thing they ring up and they will talk about, why can't I get that again?
Everyone's situation is different.
Exactly right. So avoid that chat. Avoid Gary, that's the electrician, that's giving advice. Again, go and talk to your bank, your broker, or someone that's in that industry.
Yeah, it's important. It's very important. Thanks for coming in, Adam. You're doing a really good job yourself and Mark and the team at MAW Money with our clients. We appreciate it, mate.
Thank you very much.
Thanks for joining us on the Orange Couch. Back with another episode shortly.